folks, I'm L.A. Little and this is your daily TA wrap. But we take a look at these markets and we try to do it from a neoclassical perspective, each time asking ourselves what happened today and what might it tell us about the coming ones. I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the Rocky Mountains. Folks, I'm glad you could join me. We had a little bit of a pause, kind of a consolidation today in front of a lot of big earnings after the bell. If you look at the indexes, matter of fact, we're sitting on the sectors, just quickly glance through them. Top ones were gold stocks. Did a 1-minute trade this morning on the DBA. It broke out today. Oil services still up there, but other than that, you didn't get much juice. On the downside, social stocks, although Facebook potentially changed that a little bit after hours, and you see some of the ones that were lagging before still lagging sector-wise. If we go to the closing quotes, industrials were down 12, just basically flat, 16,500. The S&Ps were down 4, 1875. The composite and the NDX were the ones that were hit. 35.57 on the NDX, 31 3/4 lower. The composite was 41.27, down 34.5. The Russell was down 3/4 of a point, 11.47. After hours, though, that all kind of changed as we got a big move out of Apple, Facebook, although Qualcomm really went south instead of north after hours. We had a setup in Apple today. It looked to me like Apple was going to at least come back into this bar the way it was trading today with volume on the way down. But after hours, you know, you got to love it because IBM, Apple has stolen the IBM story, and that is that the way you keep your price up or potentially move it higher is you do buybacks, you do dividends, and to boost, Apple does a 7-for-1 stock split. Stock was halted after hours. All that news came out, started trading again, up. It was up about $40 after hours because it was down about 6. Yeah, it was down almost 7 prior to the close. So up 41 after hours, 6.5% on the day, higher. And if you tack on, it was down 1. So that gives you about a 7.5%, 8% move after hours. So Apple's going to trade above this 550 mark tomorrow and is going to kind of set the tone for the NDX to come right back and take those gains and put them back in the NDX's pocket. Let's go through, and we'll look at Facebook and Qualcomm as well because those are the other 2 big tech names tonight. But let's go through the sectors and the stocks first, the indexes first. You know, we've been dealing with a retest regen, right? And just for those that are new or just tuning in for the first time, that retest regenerate, you broke down, right? Once you break down, you come back within 6 bars. Usually you get to the other side of that swing point low that you broke. It did that and it got over it. And when it got over it and extended the next day, it looked to us, or at least it looked to me, like it was going to do an extension, and no longer did you have a breakdown, but instead you had a sideways trade starting back up again. And that sideways trend, you know, it had a little pop to the upside, a little pop to the downside, but basically it's been inside this area. Well, it got up almost to the top of that. A little sideways move today. I suspect tomorrow it's going to trade back up a little bit on this news. But it's still, in my opinion, it's still going to have a hard time getting back up and over these highs and extending farther. 1 day's pause after 6 days straight up, another 70 S&P points higher, to me is probably not the ticket in terms of a breakout move. But we have seen over and over again these V-shaped reversals that just keep going. And so I'm not going to rule it out this time. The last time we were doing this starting up here, I told you it wasn't going to happen. I was pretty confident. I'm not as confident now. And the reason I'm not as confident is because if I look at the Russell, The Russell also failed to retest and regenerate lower. It did come back towards that bar that it broke out of, got right to it today. If I go back and look at those numbers, that high was 1147.80. It comes back to 1147.08. So it's like just within it, but it's sitting up there right where it needs to be to try to move back higher and attack that breakdown bar. And this bar is an important bar, right? If you trade back over this bar, that kind of stops a lot of the nonsense that's been going on and gives you a much better chance of pushing higher over time. What you really want to see if you're bullish is you want to see it sit here and just sideways for a while and then build up the strength to go again. If you go up here and you break it tomorrow, the odds are it's still not going to hold, right? You don't want it to break too soon. You've already had a huge move here, right? You don't want to see that. And so, you know, the ideal situation is you keep testing. You don't come back too far. Matter of fact, you would like to see today's low be about the low that you're going to get. Do 3, 4, 5 days sideways and then get your next move up. That would be the ideal situation from a bullish perspective. But the fact that it's up here, the fact that it did not regenerate lower yet, suggests that we're going to try to hang and do some sideways stuff on this particular index. You know, there's multiple sideways zones, if you will, ranges. There's one there, and then the lower one it just played with, and then one underneath it now. And so the Russell has built out a lot of ranges, and it's up here trying to get over this one into the next one. That's the story right now. That's the test right now. But it definitely got back out of this lower one into the top one. You'd like to see it go sideways if you're bullish. So indexes still look pretty good. I didn't look at the Dow. Let me just see what the Dow looks like because the Dow was up trying to test those highs. It looks like it will try again tomorrow. And let's take a quick look at the Nasdaq because the Nasdaq came back pretty hard today. Top over here is 41.1355. You got the 41.25, so didn't even get back into it. So really, this was not a bad setup to get an Apple trade back the other way. The test is going to be the breakdown bars. And so far, all you have on the Apple trade is to come back up and try to test the high from yesterday and potentially get up there and test this. So it's doing what it needs to. What it really should do the next few days is try to go sideways. That would be the more bullish case. Now let's go to Apple and look at Apple's chart and see what it looks like. So, you know, Apple's going to trade back over this 550 area, it looks like. Let me bring it to the weekly because that's really where the trade's going to be. So that prior breakdown bar was 554.80. That is the key bar. So just like we were talking about on the indexes, you want to get back over your breakdown bar. So it closes tonight at 566. So that looks like that's a pretty good, you know, probability that it's going to get over it and stay over it. The top up here, that also looks like that's the attack, right? And that top was 575. So Apple's going to trade somewhere in this range tomorrow, it looks like. And the key for Apple, stay over 554. If you can do that, then you can continue to consolidate up here and try to break out your highs. And while we're here, let's pull it back on the monthly and look at it. And on the monthly, 555 again is the same number. And then this zone up here is the tough zone. And that's 600. So if Apple can hold above 554, it can actually try to make that run to the 600 to 6.25 area. But it's got to get over that first. And matter of fact, on a monthly, you'd actually be setting up an ABCD structure. 385, up, down, up, down. No, you wouldn't. It would be small. It would be from here up. 447. 575, that's 100 points. And that would take you to 593. So on the monthly, 593. So you're talking about the same area. Okay, so that's Apple. The other one is Facebook. Let's look at Facebook real quick. because these are the ones that are going to put the juice into it tomorrow. So if I bring Facebook back down to a daily, Facebook was down about 2% today, ended up after hours closing up about 1%, so it picked up about, it looks like about 3% after hours. It's going to trade, or at least it traded to 63.65, so slightly over this, and it's got those two swing point highs. So if you're a Facebook bull or just a general market bull, you'd like to see Facebook again. The breakdown bar here is really, there's two of them. It's already attacking this one, and it looks like it will attack it again tomorrow, maybe get over it. But the real one is back up here. This is the one you have to get over to really get Facebook going again, and that high is about 65. So yeah, 64.95. That would be the number on Facebook, and that actually coincides with this number over here, which is 65.73. So that is going to be a tough zone to get back over, this area here. Facebook gets over that, well, maybe social media is still alive and kicking. All right, but that's the numbers on Facebook. And then we go to Qualcomm, which is actually a fairly heavy weighting. It's going to be pulling against the indexes. It was up here, and you see this so often. So here's your breakdown bar, 81.36. You come back up, you test it, 81.66, close under it. You got no volume, right? You have no volume on the test. You come back down. Now you're going to gap back down, and you're going to come back and test the bottom of this. 78.46 is that low. It traded at 77.57. So it's going to trade down right into these lows tomorrow. And if you're again bullish and you want to see this market hold, you really want to see this hold 77.51. That's the big number on the downside, because if it doesn't, like so many stocks so far, and this one really hadn't sold off deep yet, it has multiple swing point lows there. It's going to try to take those out, and I'm guessing that also is a swing point low on the weekly. 1, 2, 3, 4, 5, 6. No, not quite. It won't be. If it takes them out, it doesn't matter. The swing point low is going to be back here, 74. So it's only going to be on the daily, so it's not that bad. All right, let's go. Let's look at the sectors, because if I look at the general markets, it looks to me like even though they're going to get a bounce out of Apple tomorrow, they're still not showing me that they can take off yet. Let's see if the sectors are any different. So I'll start with the IYT. That's a test failure at the highs. At previous day highs, a 2-bar reversal is what it is. IYT looks like it's ready to try to come back in. Semiconductors. Semiconductors didn't quite test the top. Yeah, semis can test a little bit higher tomorrow, but I think with Qualcomm, you're going to see the semis probably under pressure tomorrow. Let me check after hours and see if the semis gave any kind of clue. Not really. About the same. They closed at 45.90 after hours, so they're gonna test that, and I think they're gonna fail though. That's the semis. Let me see if the SOX looks any different. It's a little broader. Yeah, the SOX looks a little bit better. So the semis are going to be okay, but they're probably not going to go anywhere. XLB just keeps grinding up there. This one still is in business. I don't see. Yeah, that one can kind of try to push a little bit more, but all these stocks have made big moves again. XLE, the guy just keeps going. This one doesn't want to stop, and that one can go higher still. XLF, this is where the real struggle is, because without this market's not going higher. So here's a key test tomorrow, 2207, trades up to 2206 today. This is going to test tomorrow. The financials have not had a good earnings season. Other than Wells Fargo, most of them haven't done well. This looks like the key test tomorrow. If this market's going to move higher, these financials are going to have to break higher tomorrow and hold it. And so that will be one key area to look. XLI, Well, that's a 2-bar reversal, but it does look like it's going to try to test it again tomorrow. And that's the XLI. So XLI probably tries to test again tomorrow. Technology got a big sell-off today. You're going to get a nice boost tomorrow. Again, the key here, and again, this will be a key one, getting over that swing point. Not the swing point, but the breakdown bar. That price point, that's from April 11th. Most of them are April 11th. Excuse me, April 10th. And 3650 is the number. And I don't think it will get over it. XLP. Safety sector was in rage again this morning, and that one can't go anywhere. It's going to probably fade back in finally. XLU. A little bit of a boost this morning and gave it up. That one's range trading again at the highs. XLV. Yesterday XLV was the move up. Today it comes back down a little bit. Nothing major here. That's twice though. Okay, so here again. Twice we go to test the breakdown bar. Twice we fell. That one wants to pull back. Right? That one's going to come back in. So that's 3 of them. That's 3, that's 3, that's 4. That's 4 that are struggling. XLV is a large weighting in the S&Ps. XLY is another large weighting. This one is an inside day. It failed yesterday at the highs. Didn't quite make it up there today. May try tomorrow, but also looks like it will fail. That's 2 of your major sectors. XLE is a fairly, it's about the 5th heaviest weighting. That one's still strong. XLF is the other major weighting, and that one's going to have its test finally tomorrow. And XLK, of course, is the other one. So XLK, XLF, those are the biggies tomorrow. And XLV looks like it's going to try to come back in, and this one is still a question mark. So sectors, not telling me that this market's going to move higher either, at least not tomorrow. It just looks to me like we're range trading, and all this is a bunch of up and down inside the range still, and it's just the way it looks to me. Let's see what the ox markets. And here's a good reason for it. And I didn't think about this, but I was looking at this today. The TLT, this guy continues to push higher. It won't come in, and as I've said many times already. This is a indication of anxiety, in owning equities. People keep wanting to sock their money away into these bonds. The bonds keep rising in price, so you're getting capital appreciation plus a small return, but you're getting quote-unquote safety is the way it looks. And that's in spite of tapering, and that's in spite of a lot of things, right? I did check this yesterday. That really is the swing point high. I checked 4 different quote systems. They all have it the same. So I don't know what happened that day. I'd have to go back and look, but that really was a spike high. What day was that? 31st? I don't know what happened on the 31st. So anyway, we've tested it, got over it here, retest, regen, coming back up, going to test it again. On the weekly, it wants to trade higher. It's over swing point highs. This is multiple time frame breakout. It wants to trade higher. So when I look at it from that perspective, this just to me is a negative for the general markets in that this continues to want to trade higher. And it's not going to be another large ABCD structure if it gets over this high, but it would be another one. And this would be one of many already to take it up there to a higher level still. So we'll see if it can get over the highs. It looks like it is going to try to test them once more. And gold today traded down and then back up towards the end. Really nothing inside day. That one doesn't tell me anything. Let's see what silver did. Gold does look like it still wants to trade lower though. Silver. Yeah, silver really does. Silver's trying to attack the lows one more time. And those are going to be big lows on silver, right? Because if you look at it here, you got multiple swing point lows that are not too far away from each other in price. If silver starts to break, I would think gold will follow it. So that's the way those shape up. And let me look at junk bonds one more time, because today I saw they were up early and then they sold down. Really nothing there either. And let's quickly take a look at the dollar. The dollar is an interesting case because it's tried to break out the bottom so many times but hasn't been able to. Now you've got 7 days of consolidation after a gap up with no volume. You know, what is the dollar trying to do? You would think the dollar would actually trade higher, but it can't get off the floor. And if I look at the euro, you know, they keep talking the euro down, but it won't come down. And, you know, maybe that's because at this point talk is cheap in terms of Draghi, because, you know, he's bashed it for so long. Let's look at the yen. A colleague of mine that writes here on the site has been pointing out, Gary has been pointing out the relationship between the yen. As long as when the yen goes higher, the S&P goes lower, and vice versa is the way this usually works. And as you can see here, this yen has been trading in a big range, you know, for quite some time. Well, guess what? We've been doing the same thing. So there's a higher floor here. Actually, that floor is higher than that. Let me try to see what the ranges look like here real quick. So it's kind of one up there. This one's hard to make sense of. I don't know where they are actually. You got one there, one down here it looks like. And so that makes me think this one is really about there and this one's up here. So 3 ranges, kind of a larger one in the middle. It's in the middle, trying to test the bottom one down here again. I don't know. You know, it's hard to tell. It's hard to tell. I can't read that chart. That chart just looks like a big consolidation. Let me quickly look. I got a question that was emailed to me. Let me tackle that one before I go any farther. It was in response to one of the videos. It was about CVX. Let me look up the question here real quick. So a viewer says, take a look at CVX. It is struggling with the 124.25 in an up market. 124.25. Okay. I think we'll see it pull back to 122 this week. And he's thinking that the puts are pretty cheap on this guy. Well, they probably are after this run. Let's see what the weekly looks like. I don't know. That was a nice spike off with volume here. You know, I'd be careful. I don't think it's going to do it right away because of the extension it's already made. You know, but it's coming up to multiple swing points here, and that's going to be, you know, multiple swing points on a weekly. That would be a big breakout if it were to take place. You know, you've got 3 of them lined up there now. That is resistance as well, but you know, you've got some nice volume coming into this thing. It looks to me like it is going to try to test it, and that's about 125.25. So I don't think I get too antsy to get too serious about shorting this. That's the December bar, 125.65. You may get a trade back down to 121, so those puts would probably do okay, but you might have to take some heat before that. And let's see what the other question is over here. Tommy says GDX. Let's see what GDX looks like. Please look at GDX volume today. Okay, on the weekly, okay, not much there. I know they spun around. Did they print volume today? Yeah, they did. So let's see. So you test the lows. 38.4, 33. Close the gap. Yeah, that diet just looks like short cover to me. It just reeks of short covering. So I think your volume today probably was a result of short covering. You'll know tomorrow, and the test will be here, is whether it can get over. This will redraw tomorrow, and you'll have a little zone right here. You had it today, the whole zone, but tomorrow it would be this spot, and that's going to be hard to get over to stay over. So, and what I'm looking at is these two bars. I'm looking at the March 24th low, the March 26th high. If it can get over those, it's going back to the highs. But that's going to be the test. And it doesn't look bad, but this could easily roll back over on you. So I wouldn't be chasing this thing. So this was an ABCD down, right? Completed, and now it's coming back up. Yeah, I think that's the area, and we'll probably know tomorrow. We'll get a print tomorrow to tell us. Okay, time's about up here. So we know after hours we got a big move. Tech. Well, we had a big move today in tech the other way. So tomorrow's going to be a takeaway bar. Well, that's not a bad thing. If I go back over and pull up the NDX, to get a takeaway bar and to shoot back the other way is not a bad thing at all. That's actually, if you come down like this, you want to see it taken away. But then again, today took away yesterday. So what? It's just sideways. What's important is getting back over your breakdown bars. That doesn't guarantee you're going to go up, but that would say a lot about strength, right? Because if I'm a seller, that's where I'm going to come in. And that's probably where they came in, right? That's what happened today. So if you come right back up there and you squeeze them even higher and you get over this thing, well, that really is going to, put this whole thing in a sideways trend, right? Then all of a sudden, the Nasdaq and the NDX are in sideways trends instead of downtrends. So far, they're downtrends, but that's a high. That's a swing point high. That's a trend transition if you get over it and stay over it. That's the test. That's the big test. And so, if I'm looking at it tomorrow, I want to see it get over those, in the next couple, 3 days. And in particular, I'd like to see the Russell do the same. And if those things happen, well, this range trade maybe gets a slightly bullish range trade, right? I think that that definitely helps a lot. It's been a sideways market all year long. And, if you pull this back, and I just stick it on a weekly right quick, since the beginning of the year, taking January's here, so since the beginning of the year, this market's going nowhere, right? This was last year, that's where we're at. You go over it, you go back under it, now you're going back up, and I could easily make the case, if we don't get much higher, that you're setting up, whether you're using neoclassical or classical, you're setting up a situation that could cause problems, right? And so, don't lose sight of the fact that we're not out of the woods yet. Is it better than it was a week ago? Yeah, it was, but it's supposed to be, right? We talked about that bottom getting bought, not breaking down. That's exactly what it did. If you hang up here long enough and you can't break higher, folks, the next breakdown is going to be ugly. But it's got to do that first. And so far, we're not there. And so far, it's actually doing what it needs to do from a bullish camp. But the jury's still out. This market still can go either way. So if you're playing heavy one side or the other, just keep close tabs on what's happening, because, the up and the down still have valid points that one can make about them. Thanks for joining me. I'll see you tomorrow. We'll wrap up the week. It looks to me we'll get a decent bounce in the morning. How far to carry will be the question. And can you get back over these breakdown areas? Take care, and I'll see you next time. Good night, folks.